So we have with us Miguel Vies, founder of Trading People Revolution. Miguel, welcome. We were just talking now about oil markets and the movements in these markets now. To what extent do you think that the current prices took all the possible risks into consideration when it comes to the Strait of Hormuz?
I mean, first of all, thank you for having me. And of course, the biggest problem that we see and has a big chain effect on every market right now is oil. And oil kind of became like an indicator for us as traders, as investors in the market to see if price increases like today, where we had a 6% increase, to see where markets is heading. And of course, I don't think that we have been pricing in all of the risks. Of course, US now needs to set a certain tone to save or reopen the Strait of Hormuz, if it's with insurance companies coming in or them insuring it or whatever they can do at the end of the day, if it's a ground invasion even there, which of course is to secure good oil flow and therefore better markets at the end of the day, because right now everyone is looking at oil. But looking into the Strait of Hormuz staying closed, specifically to the question, then of course we will have insane problems coming into the market. We see it with the S&P today, we see it in the stock market in general. So the oil, of course, is the most important thing right now. Securing the Strait of Hormuz, even with insurance, which of course is a good plan, rather than, of course, any invasion to the island, Kart Island, or forcefully opening the Strait of Hormuz. So if that can take control, they can take control of that, it will look much better for the markets. But so far, I think there is a certain pricing in oil right now, but it can go way, way higher depending on how this moves the next days.
Miguel, when you speak about opening the Strait of Hormuz forcefully, which scenarios are we talking about? I know that you are a financial analyst, but any use of force could have bigger repercussions, greater repercussions. And tell me, I mean, if you think that insurance companies will accept to insure oil tankers at normal prices, so of the value of the oil tankers. So if there was a military conflict, how would they accept to insure these ships?
Of course. I mean, look, we just said there's two opportunities in general that I see right now, and one of them you named is the insurance companies taking care of it, even with substitutions from America, whatever. Them taking care of that would help a lot. But does that mean that oil tankers will still try to go to the Strait? Because of course it remains dangerous. We have seen attacks, confirmed attacks on oil tankers, and it doesn't seem to be very clear on who can pass and not pass. Of course, Iran said there's certain allied countries or countries that there's no problems with as for now may pass. And the second one, of course, is Trump is de-escalating the whole situation. We're seeing that he started that on Monday, saying that there's a deal, there was talks, we don't have any proof for that. Of course, Iran sent in requests now, US sent in requests over Pakistan as mediator. So there is some progress and we can see that. But at the same time, the military is gearing up. There's many troops being sent today. They're speaking about more than 10,000 additional troops to 2,000 and 3,000 already confirmed. So it doesn't seem like, is it just for force, to force it open, to scare Iran to that sense? Or is it really preparing for a forceful opening of the Strait? And that's what I'm more so betting on. And of course, then we will see oil pricing that in. And that's what's happening today with 6% up.
Let's go back to alternatives at this stage and what the GCC countries were able to export so far. We are talking about the maximum capacity that was reached by exports from Saudi Arabia through the petroline pipeline through Yanbu. What does this mean for the pricing of oil, and what will this mean for profits that can be made by companies like Aramco, Saudi Arabia, ADNOC, Abu Dhabi, which is also using the Habshan Fujairah line?
So far, of course, oil is the greatest good from the Western side that they need to secure, because that's going to put too much pressure on Trump, on the midterms and many things coming up, of course, and the markets, which they want to control, and they're trying very hard, and we can see that. But when it comes to oil specifically, I think what we're seeing is a war premium, of course, in oil. So it's not so much about how can we actually export and how much, and there's many ways that were just explained. There's many subsidies on how we can move oil, not going through the Strait of Hormuz, but actually using the ports, using other ways, new lines and other opportunities, but it's actually just the market pricing in, and we as traders looking at the market and understanding what is fundamentally happening, and therefore increasing the price by longing the market, by staying in the market. And even though they substituted with some attacks now, as you just said, in terms of Ukraine targeting Russia, there seems to be in general a very strong targeting of energy, of course, to force enemies or to create certain forces to force enemy to, at the end of the day, be weaker or get into a certain position. So energy is kind of the weapon right now, of course. So it's not so much only about can we actually export. Profit-wise, of course, it is a very good opportunity for any country that produces oil and can actually send the oil, transport or export the oil, such as Russia is one of the biggest winner right now in all of this for what I see. But yeah, of course, if there's an opportunity, then they will make more profits for that. It will be good as long as the infrastructure stays intact.